Hello guys and welcome to today's video. A very important question. Why does the revenue figure not match with the cash figure? Well, my name is Bilal Ghattis. I'm a finance expert and trainer, and in today's video, I'm gonna show you why the revenue figure might not match with the cash figure from a theoretical perspective and from a technical perspective. And I'll guide you through a detailed example on Excel to show you why we might end up having a revenue figure that does not match with the cash figure. Let's start by discussing the differences between revenue and cash from a theoretical perspective. Revenue is usually linked to transactions. It is generated upon the sale of a good or a service. And of course, a seller can offer the buyer the option to pay right now or the option to pay later on. However, cash is usually the result of a transaction when the customer pays the seller. So cash exists upon collection from the customer. As for the time coverage, revenue is usually a figure that covers a period of time. We usually say, let's look at the revenue for the month of January. Let's look at the revenue for the first quarter of the year. Let's look at revenue for half a year, or let's look at the revenue figure for a whole year, and that would be the annual figure. However, cash is a figure at a point in time. We look at cash at a specific point in time. What's our cash balance at the end of the year? What's our cash balance on December 31st, 2024? We don't look at cash when it comes to a period of time. Third, let's talk about the location. The revenue is a figure which is located in the income statement, also known as the profit and loss statement. Cash is a figure that is located in the balance sheet, which is also known as the statement of financial position, and cash can also be the result of the cash flow statement. As for the cause or result, revenue can either lead to cash or accounts receivable in case the seller decided to allow the customer to pay later on. However, if cash was paid but revenue was not recognized, maybe because the good or service was not delivered yet, then this would not be considered as a revenue, but rather would consider this as a liability, which is called the unearned revenue. This is, in a nutshell, the difference between revenue and cash from a theoretical perspective and, of course, in simple terms. Now, let's jump into the example. We have 10 different transactions with 10 different dates, invoice numbers, amounts, and collection terms. We are required to find the revenue figures for the month of January, February, March, and then the total. Also, we're required to find the amount of cash collected in January, February, March, and the total. We start off by finding out the collection date because every customer purchased on a certain date, however, he has a specific collection term. Thus, we calculate the collection date, and that would be the date of the transaction plus the collection term, and we apply all over. The second step would be to find the amount of revenue generated in January, and once we do that, we can move the formula all over the remaining 2 months. And I'm gonna use the sum ifs. So I'm gonna write sum ifs, and I'm gonna set the sum range as the transaction amounts, and I'm gonna put 2 criteria. The criteria will limit the beginning of the month and the end of the month. So if I'm finding the revenue for the month of January, I'm gonna set the first range starting at January 1st and the second criteria ending at January 31st. So this is the first. When it comes to revenue, we look at the transaction date, and the condition would be this has to be more than or equal to January 1st, 2024, and then I set the second criteria for the same transaction date, and that would be less than or equal to January 31, 2024. And there you go. So the total amount of revenue for the month of January is 4,750. Let's double check. For us to find the revenue, we look at the transaction date. So we add all the values for the transactions in January, and the total is 4,750. Now what we do is we copy the formula all over. We do it for February. We just change the dates. So this will be February 1st, 2024 and February 28, 2024. We do this for March also. We change the date to March 1st and March 31st. Now to double check, we add the revenue for all 3 months. I missed a cell. Now let's look at the cash collection. The cash collection depends on the same formula. However, the criteria will be based on the collection date. So I'm gonna take the same formula and I'm gonna apply it over here. However, the criteria will depend on the collection date. We do this all over. We move the transaction date to the collection date. Same goes to March. Let's edit it manually. March 1st, March 31st, and now we do the total. So this will be the sum of all three. I missed one again. There you go. So the total is the same, but the difference is in the time frame, because recognizing revenue depends on the date of revenue recognition, which is the transaction date. However, collecting cash depends on the collection date. So for a simple example, if we draw a timeline and we take one of those transactions as an example, for example this one, this transaction occurred in Jan, so this is 1/1 and this is 31/1. This is Jan. Transaction 5 shows that we generated a revenue of $550. However, we're gonna end up collecting this revenue 20 days after the transaction date. So that would be on February 9th. So the collection is gonna be over here in Feb, which is why sometimes we end with a mismatch between the revenue that we generate and the cash that we collect due to time difference. And of course, keep in mind that we are excluding any cash payments. I hope that you have found this video to be useful. If you have any question, please drop it in the comments section. If not, please give me that thumbs up button and subscribe to my channel to stay tuned for future video. See you guys.